Dear clients, welcome to PhillipCapital's weekly Market Watch. I'm Benjamin, Analyst from Phillip Securities Research. Today, I will share with you on the outlook on the offshore and marine sector. Our discussion today will be on two key areas, the jackup market and the deepwater floater market. There's been some concerns this year on the oversupply of jackups coming into the market. If we examine the historical rig orders, the order boom is evident in the past few years. However, for year-to-date 2014, total rig orders have slowed down significantly from historical highs. Orders in 2013 and 2014 have been largely concentrated in the jackup segment. Jackup deliveries are going to peak from 2015 through 2016, but the majority of the new builds are not contracted yet. We estimate that only about 11% of new builds are contracted and owned by established drillers, while more than 50% are not contracted and are not owned by established drillers. It is no wonder there's a concern on the jackup market. In our view, things are not as bad as it seems. In fact, we believe demand for certain types of jackups are still firm for a few reasons. Examining the age profile of the global jackup fleet, close to half are already more than 30 years old. As older rigs are not as competitive and require more cost to meet operational safety standards, we believe this is a driver for replacement cycle. When we examine the utilization rates and day rates for different jackups, high-spec jackups command higher day rates and deployment than low-spec jackups. On top of that, only about 15% of the current 500 plus jackup fleet is of high-spec, and the 80-odd high-spec new-build jackups are insufficient to replace the low-spec jackups. Therefore, we believe that despite the seemingly glut of jackup new builds, demand still exists for high-spec jackups. For the deepwater floater market, weakness persists in this segment of the offshore market. Integrated oil companies have tightened capex this year, and there were pullbacks in contracting of floaters. With the recent drop in oil prices, it is also a downside risk to E&P spending growth, especially since deepwater is costlier. Floaters are currently facing an oversupply issue, which result in downward pressure to both utilization rates and day rates. About half of floater new builds are not contracted yet. Many global rig owners have also expressed concerns on the deepwater market in the short term. As long as oil prices continue to be persistently low, we are bearish on the deepwater market. With that, I come to the end of the presentation. Thank you for watching this week's Market Watch. I'm Benjamin from Phillip Securities. Please subscribe to us on PhillipCapital YouTube channel and Facebook, and stay tuned for more Market Watch videos.